Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Shivani Karwat from Orient Capital. Thank you, and over to you, Ms. Karwat.
Good evening, everyone. Welcome to the Q1FY25 earnings con call for Sapphire Foods India Limited. From the management, we have with us Mr. Sanjay Purohit, Group CEO and Whole-time Director, Mr. Vijay Jain, CFO, and Mr. Rahul Kapoor, Head Investor Relations. I hope everybody had a chance to go through the results and investor presentation, which was uploaded on the exchange earlier today. Before we proceed, a reminder that this call may contain some forward-looking statements which do not guarantee future performance and involve unforeseen risks. A detailed disclaimer has also been published in the presentation. I will now hand over the call to Mr. Sanjay. Over to you, sir.
Good afternoon, everybody. Welcome to the Sapphire Foods Q1 FY25 financial highlights. This quarter has been a steady quarter of performance for us. KFC, like I said, saw steady performance, and we had marked improvement in the performance of Pizza Hut and Sri Lanka. More details to follow. Our Q1 FY25 consolidated restaurant sales grew by 10% to 717 crores, and our EBITDA increased by 1% to 124 crores. While we have seen discretionary consumer spends at the same subdued levels as the past few quarters, specifically Sapphire KFC has been impacted by the shift in dates of the Navratra festival compared to last year. This year Navratra was entirely in April, where last year it was entirely in March. In Q1 FY25, we added 13 KFC stores and 1 Pizza Hut restaurant in India. Our total count is 886 as of 30th June. Our consolidated restaurant EBITDA margin was 15.1%, down 210 basis points. As I said earlier, consolidated EBITDA grew year on year by 1%. It was down 150 basis points versus last year. And our consolidated adjusted EBITDA of 71 crores or 9.9% declined year on year by 8% or 190 basis points. Our consolidated PBT at 12 crores or 1.7%. Adjusted PBT was 24 crores or 3.3%. PAT was 8 crores or 1.1%, and adjusted PAT was 17 crores or 2.4%. With this, I'll take you to the KFC page. I'm referring to page 17 and 18 of the investor deck that we had published. KFC delivered a revenue growth of 11% with minus 6% SSSG, and a large portion of this minus 6% SSSG was in the month of April itself. As you know, among all QSR brands, KFC is impacted the most during vegetarian festival days because more than 95% of our menu contribution comes from non-veg, and Navratra, Shravan, Shraddh do impact the brand substantially. We are focused on 4-5 areas to grow our business. One is we continue to enhance fried chicken category relevance through building the lunch occasion. We had lunch special menus at 149 and 199 and 249, and these were advertised meal bundles. So that's one area of focus. The second area of focus is value and addressed through the 99 and the 149 price points, both individual and group meal offerings. We then launched the International Burger Fest, which was a range of 5 burgers in different sauces. One of the interesting new additions to this burger range was the vegetarian paneer zinger also. In July, we have launched additional variants to our range of chicken rolls, and we believe that this is an important new addition, new permanent addition to our menu. It gives us an option to play in the snacking day part also. We opened about 13 stores to take the total KFC count to 442 stores. And now I'll just hand it over to Vijay to talk us through the financial numbers.
I'm on slide 23. KFC had delivery mix of 40% versus 36% last year. The SSSG was -6% and the ADS came at 122. The ADS number includes the 23% restaurant additions which we had over last 1 year or so. Overall revenue grew by 11%. Gross margin improved by 10 basis points. The restaurant EBITDA came in at 18.8%. Vis-a-vis last year, it had a drop because of the operating deleverage which we had. Slide number 26 gives you a 4-year and a 5-quarter trend. As can be seen that 18.8% for the quarter despite Navratra is quite a steady performance for KFC. And the overall brand still remains quite strong. We had called out in December 21 that we would double the store count in 3 to 4 years time. Quite happy to say that we are on track to double the count in 3 years time. So by end of December 24, we should be close to 500 restaurant count. Over to you, Sanjay.
Yeah. On Pizza Hut, we have seen 6 to 7 quarters of declining ADS trend. And we had said that in the light of this performance, which has been exacerbated by competitive pressures, we need to up the ante on the brand, revive consumer interest through product, innovation, marketing, and customer service and operations. In line with the above, we launched a differentiated folded handheld pizza concept called Melts in March 24, along with a strong mass media advertising campaign starting in the month of April, right through the quarter. And this has helped us improve consumer interest and has reversed the ADS decline of successive quarters. Typically from the Jan-Feb-March quarter to the April-May-June, we see a seasonal uplift in the region of 6 to 8%. This year, the uplift that we got was close to about 17% or so. But this is just the start of the battle on Pizza Hut. We need to continue this, as we've said earlier, and sustain it over a much longer period of time. We opened 1 store to take a count to 320, and if you can see the slide number 29, that gives you a screenshot of the mass media television campaign that we ran on Melts. Perhaps the brand came back on television after many, many years, and this has enabled us to lift initial momentum on the brand. Quickly, Vijay, could you talk us through the financials?
Slide 31, delivery mix remained the same as last year for Pizza Hut at 50%. In terms of SSSG, -7% for the quarter. The ADS came in at 48,000, as Sanjay called out. a big improvement sequentially, 17% over the previous quarter. Overall revenue grew by 3%. So again, previous quarters we had seen the brand decline at the overall revenue level. So this was a positive for the quarter for the brand, where we grew by 3%. Gross margin improved by 100 basis points, and overall restaurant EBITDA came in at 4.6%. Again, compared to the previous quarter where we actually had a loss, 4.6% was quite a healthy margin compared to the previous quarter. And just a call out that this 4.6% includes additional marketing investment as well. Slide 34 gives you 4 year and 5 quarter trend. As can be seen that even after a low ADS in the previous quarter, which was Q4 of last financial year and a loss, the brand has come back quite strongly with the ADS of 48,000 and restaurant EBITDA of 4.6%. Over to you, Sanjay.
Our Sri Lanka business also continues to improve. This quarter we've had really strong SSSG performance of 11% growth, backed by even higher transaction growth. This transaction growth really bodes well for the business going forward. The brand and the company, we continue to lead the QSR industry, and as you can see in the slide 37, the readers of the business magazine LMD, which is Sri Lanka's biggest business magazine, has voted Pizza Hut and our company there as the best and the most loved brand stroke company in the country.
Yeah. Slide 38, delivery mix came in at 38% for Lanka business, again similar to last year. SSSG was 11%, backed by double-digit transaction growth. Overall revenue increased by 13% in LKR terms and 19% in Indian rupees. The gross margin improved by 10 basis points, and overall restaurant EBITDA came in at 13.2%, which is a 20 basis points improvement over last year. Slide 42 gives you a 4 year and 5 quarter trend. As can be seen that because of the double-digit growth on SSSG as well as the transaction growth, we were able to deliver small improvement on the margin as well, 13.2%. And this SSSG and transaction growth augurs well for the brand as we move forward.
In closing, I just wanted to also talk about our ESG initiative, and on slide 43 you can see that we published a third ESG report under GRI, SASB and BRSR standards. We're really the only Indian QSR company to publish a full-fledged ESG report, and this year we also obtained limited assurance on our BRSR and ESG report on a voluntary basis. The other achievement we are quite proud of is to receive Indian Green Building Council Gold certification for one of our KFC restaurants. We believe this is the start to build far more sustainable stores. We are the only company in the Indian QSR and the retail segment to achieve this feat. Both the ESG report and now the annual financial report for FY23-24, both of them are now available on our website, sapphirefoods.in. And with this, we will open the discussion to question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Saurabh Kundan from Goldman Sachs. Please go ahead.
Yes, Thank you for the opportunity. I have two questions. The first one is around KFC. The SSSG trend has been worsening in the last 3-4 quarters. -6% is quite a large decline. I understand the impact of Navratra calendar shifts, but are you getting a sense that adjusted for Navratra, is the trend improving or is it stable or deteriorating?
Yeah. So apart from April month, I would say it is still steady, still a little bit negative, but marginally negative. It's in April when those 10 days impacted, or those 9 days impacted the brand significantly.
And even if you adjust for Navratra and if you take this Navratra impact into a quarter earlier, the 2 quarters, which would be Q4 and Q1, would be similar. So that would give indication that it's steady. It's neither improving nor worsening.
So Q4 and Q1 average is roughly -4. So is that something that would be representative of what's happening?
Yeah, broad representative. We have not done the exact match, but yeah, it can be representative.
Okay. Right.
Marginally better for that.
Understood. Fair enough. And sir, for Pizza Hut, the sequential improvement is quite encouraging. And I just wanted to double check with you. After fourth quarter, you had mentioned that there will be no step up in the store additions until you reach 8-10% margin. So I hope. Does that still hold? That guidance holds?
So what we had called out that there are 3 parameters which we are looking at before jumping into a aggressive store expansion or a huge store expansion. One we said was SSSG, second was can the ADS move towards 50,000 mark, and the third was can the profitability move towards 8-10% mark. So it's not that each of the 3 has to actually hit and then only we start the expansion, because there could always be opportunities to open few stores. Having said that, the current status remains the same. We are going to be extra cautious in store opening, and we don't see a big chunk being opened in this particular financial year.
Yeah, but it's not going to be zero. I think there are opportunities to open a few stores, and we'll be far more cautious with our store opening. In the first 6 months of the calendar year, it has turned out that we have opened just 1 store. I'm just looking at Jan to June. But the idea is to be cautious, and I don't think we've ever said that we will not open any store.
Right, thank you. Thanks a lot for your answers. Thank you.
Thank you.
Thank you, sir.
The next question is from the line of Nihal Maheshwari from Ambit Capital. Please go ahead.
Yes, good evening, Sanjay and Vijay. 3 questions. First is, if I look at the dine-in revenues for KFC, that has seen a sharp deceleration. What explains this trend, just to get your thoughts?
Yeah, so first, Nihal, welcome in a different avatar. I hope you're doing well.
Thank you, sir.
So I think you're right that in general across the industry we are seeing a decline in dine-in. Overall delivery still seems to be holding up, and that's perhaps a consumer trend that we are seeing. So I think this is across the industry, not only related to us. Having said that, there are many steps that we are taking to improve dine-in, including specific menus, value offerings. Our lunch advertising is all around getting people to come into our stores during this important dining occasion. We are also there are very early experiments with coffee that are taking place. So we are not sitting back and allowing macro trends to overwhelm us. We are trying to do our best to get consumers back into our stores, including some of our refurbishments that we have done, make just these stores far more attractive also for consumers and give them a good experience.
Just a clarification, when you mention coffee, is that an indication to look at cafe as an offering in KFC?
Yeah. No, so perhaps the expression of it might be very different from what competitors do. This is just very early days, really.
Got that. Second question was on KFC itself. We do know that last year in Q2 you had the impact of an extended Adhik Maas. So is it that you expect the base turns favorable and that could be at least optically giving you a better SSG in Q2?
Yeah, so that Adhik Maas was actually impacted us in July last year, and in July it was about 18 days or so that we got impacted. The North region especially got impacted. I think, therefore, like I said earlier to Saurabh, I think the underlying trends remain similar if adjusted for all these plus minuses.
Got that. Just if I could take one final question is on Pizza Hut. The sequential improvement in ADS is encouraging. If I just try looking at the Q2 quarter of last year, which was similar in terms of ADS and top line, versus that margins are still like 300 bits lower. So is this the incremental marketing spend that is leading to this? Because at least stores wise there is not that much of a difference. This is the comments on that.
Broadly, but we are not giving out exact number, but broadly, yes, there is a big impact of marketing over there.
Also, from a year-to-year basis, costs also change, Nihal. You have new minimum wages.
So you won't have the similar flow through of 48,000 ADS in the previous year and a 48,000 ADS a year later with the cost inflation, especially the wage inflation. Yeah.
Got that. Sure. That is it from my side.
So it's a combination. A big portion would be marketing, additional marketing investments, and a partly would be the wage inflation impact as well, or wage and the other cost inflation.
Understood.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Tejas Shah from Avendus Spark Institutional Equities. Please go ahead.
Hi Sanjay, Vijay. Thanks for the opportunity. Just one question. Wanted to know what will be the contribution of non-vegetarian in our Pizza Hut franchise?
So roughly I would say 75-25 veg, non-veg.
So then from that perspective, if we extend the headwind that impacted the KFC, the vegetarian portfolio of Pizza Hut would have done much better than what it appears at aggregate level. Is that so?
So much better is perhaps not the right correlation. The way that I look at it is in Navratra, non-veg consumption gets impacted. Normal food continues. It doesn't increase or anything.
No, Sanjay, why I meant that let's assume that 30% of business would have got impacted in Pizza Hut also. So the 70% would have done much better than what the aggregate number suggests, right?
I don't have the exact answer to that, but yeah, it could be. You could be right there, Tejas. I don't have the numbers.
Perfect. And second, your peers have actually called out some geopolitical issues still hurting sentiments on some of these brands. Any read through there?
So the fact of the matter is that there is an impact. I don't think we have not called it out in the past because these are things that perhaps we just have to live with. It's not right across the country, but there are pockets where we have got impacted. we continue to get impacted, there is no let up. There's no let up or no bounce back that we see in some of these pockets.
Got it. That's all from my side. Thanks and all the best for coming quarters.
Thank you, Tejas.
Thank you. The next question is from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Hi Sanjay, good evening. Thanks for the
Hello Shirish.
Yeah. I'm just reading out 2-3 data points. If I look back, Q4 we had a monthly active users of about 1.25 million for KFC, and Pizza Hut was 0.89. This quarter we have moved to 1.5 million. And when I look at the store addition on a YY basis is about 23%. So right now we have 442 stores. Last year we had 358 stores. But then question is that the ADS has declined almost 12%. Understandably, partially you have mentioned about Navratra. So the question here is that if the monthly active users has gone up, could be the fraction because of the number of stores which has got added. But do you think over next 2 to 3 years KFC will become in a positive SSG territory?
So there are two separate things. When you look at our overall ADS that we report, that overall ADS is inclusive of new stores, and like we have said in the past, new stores start at much lower than the average of the brand, and then over a period of time they catch up to the brand average. So if you see the pace of expansion that we have had, and we have doubled the number of stores roughly over the last 3 years, if the new stores are going to come in at much below brand average, then the brand average is unlikely to see any growth in the at an overall basis. Having said that, SSSG is absolutely important, and we don't think that this environment of negative SSSG should continue into the future. And we believe that we are taking all the necessary steps to improve brand salience. So two separate parts to the two separate answers to your question.
Okay. The reason why I'm asking, because you said that we are bringing a lot of occasion to improve the consumption, and therefore rightfully you have brought the burger range and even 99. So I was more curious, is this enough to drive the traffic, and that would at some point of time over next 2-3 quarters will lead to a positive SSG? Because I'm giving the benefit in this quarter that Navratra has eaten up some SSG.
Yeah. So I guess there are two parts to this. One is we are doing everything that we can, and sometimes it is not about doing 100 things, but doing 3 or 4 things that we feel are impactful and really putting marketing muscle behind it. So in our mind, we are quite happy with the initiatives that we are putting out. Having said that, there has to be some improvement also in the macros, and I don't think the macros, especially the private final consumption expenditure, is going to be muted for eternity. It has to start improving in the next couple of quarters. Combined with the efforts that we are taking, I think we should be positive about same-store sales growth on KFC. All these are in the end cycles, I believe. So you go through periods where you've got really strong SSSGs, and then periods when you've got little weaker same-store sales growth. I think we are in one of those cycles. In such a cycle, what we do and what we put out in the market, I think, is far more important. And I think we are taking the right steps there, Shirish.
I got that. And we just heard the other, not directly, but the player in the morning. Now they are offering 2 burgers at 79. So I think is the market conditions are not yet looking right. So that's why this question I made. Anyway, I'll take it offline. My second question and last question to Vijay. What are the margin levers? Because I was expecting some bigger margin expansion because though gross margin is improved only by 10-20 basis points, but that is not reflected into the EBITDA. So and going forward, what are the levers we have
for KFC?
And the overall company?
So again, if I break it down, the KFC got impacted by the negative 6%, right? So typically a negative 6% would lead to a bigger drop at a restaurant EBITDA level with the kind of flow through our business has in terms of the operating leverage. We were able to actually limit that downside by actually delivering quite a bit of cost efficiencies across our labor cost, the operating cost, electricity cost, the gas cylinder cost, and that helped us deliver this 18.8% despite a negative 6%. Otherwise, typically a negative 6% could lead to a bigger erosion on the margin.
Okay, that's it from me. Thank you.
Thank you, Shirish.
Thank you. The next question is from the line of Gaurav Jogani from Axis Capital. Please go ahead.
Thank you for the opportunity, and I would congratulate you on a resilient margin performance in a difficult time. So my first question is with regards to the gap between the SSG growth and the ADS growth in the Pizza Hut segment. Now that gap seems to be narrowing, and this seems to be also narrowing because of the muted store opening that we see. So in that context, how should we look it ahead, given the fact that the SSGs are still negative and we might expect a muted store opening for the year? How do you look at this metric going ahead?
So again, while we don't give out a specific guidance on quarter or a year, we have always called out the general trend how the ADS movements are likely to happen. We typically at a 5% to 7% SSSG and a 20% kind of a store additions, we expect the ADS to remain stable. Now, if either of the parameters goes up and down, it will have an impact. So if you have a negative SSSG and you continue to open stores, it will actually bring down the ADS. Right now, what you are seeing stable ADS because you are not adding stores. So to hold on to the ADS level, 5% kind of a SSSG and a 20% kind of a store additions would help you actually deliver a muted or a stable ADS, not the muted, a stable ADS. Having said that, in Pizza Hut, all the attempts are in terms of product innovation and the marketing investment is to get the ADS levels up because these current ADS levels are not sufficient enough for us to move towards double-digit SSSG mark. And as Sanjay said, you are looking at investing behind product innovation and marketing over several quarters, and this is not just a couple of quarter activity.
So just a follow-up on the marketing bit. As you've already mentioned, that is elevated. So can we expect this to elevate further the marketing spends as we approach the festive season, or at least it is expected to remain at this current levels?
We expect it to remain at the current levels for quite a few quarters, several quarters. But I think we are quite happy with the current level of spend which we are incurring, and this allows us to go on mass media. So
I think the idea is to be consistent here, Gaurav, over a period of time.
Sure. Sir, in addition to this question, Pizza Hut, what kind of store opening one should build? While the 3 to 5 year targets for you might remain the same, but in the near term, given that we have only opened one store in the CY, what kind of store numbers at least you can help us guide for at least this year particularly?
So again, this year it will be a muted store opening. We have called out that we are not comfortable giving a 3 or 5 year projections right now when for the last 6 months we haven't opened a single store in that sense, or over last 1 year we opened 18 restaurants. So I think we'll take it a quarter by quarter. Once we become more comfortable on the brand margins and the ADS, I think that's the time we'll engage in a conversation on how the store openings are likely to be over the next 3 to 5 years. For the time being, you can just assume the way we have operated over last 1 year, and I would ask you to take a trend over last 1 year also to build in how the next 1 year could look like. But that's a very broad answer I'm giving you. The right way would be to wait for a couple of quarters, and then we can give you more definite guidance.
Sure. And the last week on the QA.
It's not going to be zero is the point, Gaurav.
Yeah, sir, the only thing was, if not zero, I mean, whether it be 10 or 20, because Generally, we have been opening 35 to 40 stores. Or
it will be lower than that, and that's why I said out in the last 1 year we opened 18. So maybe that can be that can be taken as a reference point maybe.
Got it. And sir, the last bit on the KFC now. KFC, though we can understand the impact of the Navratra in this particular quarter, but any sense in the remaining period, that is the May and the June month, are you seeing any uptick in the core consumer consumption in terms of, say, either the ticket size or in the footfall? Any which ways you are seeing any improvement?
No, Sanjay called this out. So we are largely at the similar position. We are not seeing a trend which is either moving in a positive direction or deteriorating further. I think we are in a steady situation, which is if I look at the quarter four of last year and quarter one, I think both were negative. We are in a similar trajectory. There could be slight up and down in terms of numbers. This is where the festival falls. But again, Q2 again has Shravan, while it's one less this time. You are not really seeing an uptick. You are at the same situation.
Got it, sir. Thank you for answering my question.
Thank you. The next question is from the line of Jay Kumar Doshi from Kotak Bank. Please go ahead.
Hello, Jay.
Jay Kumar Doshi, please go
Can you
ahead.
hear us, Jay?
Jay Kumar Doshi is not online. The next question is from the line of Devanshu Bansal from MK Global. Please go ahead.
Yes, sir. Hi. Thanks for the opportunity. Sanjay, I'm not sure if these are right macro indicators, but just wanted to check if employment growth in the country or wage hikes, sort of relevant matrices that you track internally for sort of tracking improvement in demand. Any sense on these matrices for FY25 if you're tracking these metrics?
Devanshu, we haven't really tracked these two metrics in specific. I think the broader metrics which we track, this is private final consumption expenditure metrics along with the GDP data. So that gives an indication. Over last, I think, 6 odd quarters, the private final consumption expenditure has been below the GDP growth rate. And something like this happened for such a long period was maybe a couple of decades ago, if I recollect correctly, 2003-2004 period. And it took a couple of years for things to turn around. So we are just hoping that maybe we are probably closer to the turnaround rather than later. But if you have any indications on these two data points, maybe you can share with us.
Yeah. And many of these data points, Devanshu, are also hindsight data points. So it doesn't help us in the moment. In the moment, I think said this in the past, all that we can do is try and put the best possible marketing plan, in front of consumers and back it up with great customer service. So that's all that we can do. And then I think what we see in our stores perhaps plays out when the government releases some of the matrices, but it doesn't help us in foresight.
Got it, Sanjay. Very clear. Second, I wanted to check, typically, so we are at 122 in KFC ADS, which was 135 in 23. So is this entirely due to weak macros, or there is some bit of bill size reduction also because there has been a focus on value launches, or there is some increase in competition from that perspective? So any color on this, please?
So largely it is because of the new store addition. We have called out our new stores actually come at 75 to 80% ADS levels of the brand average. And our run rate, if you have doubled it over largely over 3 years, which means 25% additions. So that's one prime reason why the ADS gets pulled down. Typically what happens when you're doing the additions at such a large scale, a 5 to 7% SSSG helps you to balance that particular ADS drop caused by the new stores. And that kind of SSSG we have not seen over last 5 quarters or so. In fact, the last 3 quarters have been negative. So that's what has caused down the overall ADS to come down. Primarily new store, and second, not helped by the fact that the SSSG has been flat to negative.
Got it. Does that indicate, at least for mature stores, bearing the impact of new store additions, it is okay? So SSG, you are saying it is negative, so that includes mature stores. Sorry, my bad. Yeah.
Yes. So SSG is an indicator of mature store performance.
Okay. And Vijay, last question from my end. I wanted to check, there's no sequential improvement in margins for KFC, despite a healthy pickup in the revenue. What is the reason for this? Because gross margins are also stable sequentially.
So while gross margins are stable, what you don't see is that when you typically get into a new year, there is a wage inflation which comes into the picture. Also, when you compare Q4 versus Q1, the seasonality kicks into the picture. So Q4 typically, from a utility cost, electricity cost, it's quite a soft month in terms of those costs because the winter across the country. And this year, April, May, June, from a utility cost point of view, has been brutal. Add to that wage inflation. So these are the two areas which primarily causes gap vis-a-vis quarter 4. A third point which I can add to it is the delivery mix. When you look at the delivery mix of quarter 4 versus quarter 1, the quarter 1 is slightly higher than quarter 4, and delivery is definitely, while profitable, it's slightly lower profitability compared to other channels. So these are the three prime reasons.
Okay. Out of these three, I guess utility you may see some moderation in the coming quarters, but other than that, these are more structural, right?
The wage cost and the delivery is yes.
Yeah. Okay. Got it. Thank you. Thanks for taking the question.
Thank you. The next question is from the line of Prolin Nandu from Edelweiss Public Alts. Please go ahead.
Hi, sir. This is Prolin from Edelweiss Public Alternatives. The question is on marketing spend, right? So what we have seen is that some of the mature consumer brands would spend on marketing when the environment is right in terms of macro environment, right, in some sense. But we have continued to probably spend on marketing maybe slightly higher than what we have been doing in the past. Just wanted to understand, is it still that QSR as a category or KFC as a brand is yet to reach that maturity and it still needs those marketing spends to bring in the kind of footfall or sales number that we are witnessing? Or how do you look at marketing spend continue to be at a higher level in a weak macro environment?
So in a weak macro environment, and especially if a brand is not performing as well as it should, then there have to be some interventions on the part of the brand to regain consumer interest. In such circumstances is when additional marketing, but however spent behind relevant areas of interest for the consumer will help the brand. So I don't think there is a generalization that we can make that mature brands spend less in difficult environments and more in better environments. I don't think that's a generalization that holds. In the case of KFC, we have continued with the same level of spend. It is in Pizza Hut where we have increased the advertising spends.
Sure. So, this question was more to understand this macro slowdown, right? So, maybe the other way to put this is that, especially in KFC, is it fair that whatever numbers that we are getting is because of some marketing spends and things could have been quite worse if we had not been spending the same amount of money?
It's a hypothetical question, really. I don't know how to answer it. Our level of spend on KFC is similar, but there are macro headwinds that we are facing.
Sure. That's it from my side. Thanks a lot.
Thank you, Prolin.
Thank you. The next question is from the line of Latika Chopra from JP Morgan. Please go ahead.
Hi, thank you for the opportunity. My first question was, did you take any price increases for KFC during the quarter?
So we had taken a very small price increase of 1%, and it was not across the board. There was some opportunity of price corrections on some of our SKUs. That's what we did. So it was close to 1%.
And nothing on Pizza Hut.
Nothing on Pizza Hut.
If that's your next question.
No, that was not. Considering you're trying to turning it around. The second question was on this dine-in weakness. Could you elaborate a bit more on the nuances of this? Sequentially, have you continued to see this deteriorating, stabilizing, improving? And how will you kind of, cut it or dissect it away from probably a structural move of consumers more towards delivery versus the macro factor? Any nuances, any region-wise disparity, large cities versus smaller ones, anything that you could show some more color on?
So I think there are two parts here. One is on a structural basis, yes, there is a move, but that move is a very, very slow move, I would say, from dine-in to delivery. There is another important part that has improved our delivery contribution, which is that today most of our stores in both KFC as well as Pizza Hut are open beyond the 12 hours. They're actually open for late night, and that's the time of the day part that we don't do any dine-in sales, and it's only delivery. So we have added this late night day part, which is 100% delivery, and that has also contributed to the increased relevance of delivery in our mix. I would say that has had a bigger impact than a structural change between dine-in and delivery.
Okay, and last question was, any sense of number of openings for KFC this year?
Could you come again, Latika, please?
Your voice is breaking, Latika.
Hello?
Hello, Miss Latika. Your voice is not clear. Thank you. The next question is from the line of Chirag Lodaya from ValueQuest Investment Advisors. Please go ahead.
Yeah, thank you for the opportunity. Sir, my question was on cost containment. So overall, what we see in KFC is despite 6% negative SSG, our restaurant margins are pretty healthy, 18.8, and you mentioned few of the cost control measures, etc. But going ahead, how to see if suppose hypothetically -5, -6 SSG persists for more 2-3 quarters, will we be able to maintain this kind of restaurant operating margins?
No, the answer is no. So there is a limited opportunity which can be available on the cost efficiency, right? So if the environment continues to be -5, -6% for a long period of time, you will certainly see an impact on the margins. We saw that in case of Pizza Hut. So we would hope that our initiatives which we are taking to get the SSSG back actually fructifies in the next few quarters.
Right. And if I want to understand, what percentage of store operating cost would be fixed in nature?
So typically the way we call out our business model is flow through. So roughly, and what we mean by flow through is that for every 100 rupee of sale, we end up getting 35 to 40 rupees to the bottom line, and vice versa.
Okay. I'll take it offline in detail later. And second was on store opening plan. So, just wanted to understand from KFC point of view, how do you look at this? If, say, slowdown persists, will we, change trajectory in terms of store opening, or will be, opening the guided number of stores?
So we have always called out our Sapphire way of how do we approach the store opening. So that's paramount. So if there is a persistently negative SSSG and there is a huge impact on the EBITDA or the restaurant EBITDA, certainly you have to revisit your pace of expansion. And we had called this out quite early in case of Pizza Hut also. First we went slow and then we became extremely cautious. So the same stands true for KFC. So if you are going to see a persistently negative SSSG and an impact on restaurant EBITDA which is significant, then you will have to, and we will reapproach or revisit the store expansion plan. Right now we are still in a okay zone, or we are still in a comfortable or reasonable zone. We have always called out we would like our KFC margins to be 19-20, near to 20. If it goes significantly below that, yes, we will revisit our expansion strategy.
Right. And just lastly on overall, consumer slowdown. So as we were discussing, in the previous participants' question that, what we see is delivery across all QSR format is, doing pretty well. The issue is with dine-in. So at a consumer level or consumer behavior, is again, at aggregate, is there that shift in consumer is happening from, dine-in to delivery for formats like us? Is it where that the overall, weakness is? How do you read the situation?
Quite clearly in the previous question, in our case, there is a shift, but there is also an additional day part that has opened up over the last 12-15 months, which is only delivery. So from a contribution perspective, the impact of that is a little more than perhaps the consumer shift from less dine-in.
This is operations after 11 p.m. in the night. So
the reason I was asking that question again was, if I look at per store delivery revenue, it is in ballpark 1.6, 1.7. So even if there is a positive delta of that, there is no significant uptick seen there.
And the other way to look at it is probably that additional time period or operational period wouldn't have been there. You would have seen even the delivery sales probably degrowing. So,
but that number, okay, fine.
Thank you, Chirag.
Thank you. The next question is from the line of Jay Kumar Doshi from Kotak Bank. Please go ahead.
Hello, Jay.
Hi, thanks for the opportunity, and sorry I couldn't some problem earlier when my name was called out. My question is just a follow-up on the previous questions itself, but a very brief one. Do you think that there was an impact on dine-in because of extremely hot summer this season, or do you see this dine-in delivery shift trend continue in July as well?
I've not compared the two numbers, Jay. So let me not try and answer something that I'm not sure of. But we can get back to you if necessary.
Sure, understood. Thank you so much.
Thank you. The next question is from the line of Dheeraj Mistry from Antique. Please go ahead.
Yeah, thank you for the opportunity. Sorry if I missed out on this. Can you give the similar trend what you witness in KFC, that underlying demand excluding of this one-off like Navratra and Adhik Maas remains stable at -3 to 4%? How do you see month-on-month SSG for Pizza Hut? Is there on month-on-month basis there is some improvement in Pizza Hut, or whether it remains same across months?
So again, the way to look at would be that how are you looking at the ADS improvement? Because SSSG, depending upon the base, it can go really up and down. And last year, Pizza Hut ADS was on a declining trend. The 48,000 ADS, the idea is that there could be small impact in Q2 because of the seasonality. Otherwise, Q2 for us is largely similar to Q1. So if it stays there, you could see still a slightly negative SSSG even in Pizza Hut because of the base effect.
Got it. And second on question on delivery and dine-in channel. Sorry to dwell a bit more on this, but if I look versus last year for Pizza Hut, the contribution from delivery and dine-in channel is broadly similar. So we have not witnessed any major difference between dine-in and delivery channel. And am I reading it wrongly, or it's the same case?
You are right there. So a big jump, the 17% sequential improvement and the improvement vis-a-vis last year has been across the channels. The benefit which we have seen in that upliftment on account of marketing promotions backed by the product innovation, the Melts launch, we have seen upliftment across the channel for Pizza Hut.
No, sorry, I meant I was comparing with the last year versus this year, not on sequential basis for Pizza Hut.
The answer is true for last year versus this year and even in the sequential. So it's largely remained at 50%, and yet we have improved our ADS by 17%, which means across the channels the improvement has been similar.
Got it. And the trend would be similar for KFC as well.
So KFC, we have seen it the other way around, right? KFC, we have seen delivery mix improved sequentially as well as over last year. And so which means the dining has dropped a bit and delivery has performed better than dining.
Got it. Thank you for, that's it from my side.
Thank you. The next question is from the line of Ashutosh Parishar from Mirabilis Investment Trust. Please go ahead.
Yeah, thanks for the opportunity. So just a couple of questions. So first question is on the line of corporate costs. So last few quarters, this has ranged between like 32 to 34 crores of quarterly run rate, which jumped to like 38, 39 crores this quarter. So any sense on the progression of this in the coming quarters? How should we see this going ahead, and what sort of leverage can we get on this front? And the second will, yeah.
Go ahead.
Yeah. So second question would be on the Pizza Hut store addition front. So like we understand that the addition will be quite muted over the next couple of quarters at least, given the demand trends, and this would be true for both the franchises in India. So given this muted trends of store addition, how is Yum thinking about its growth strategy in India based on your conversation with the brand owners? So any sense on that would be helpful.
Yeah, so on corporate costs, what's actually comparing is the previous quarter versus current quarter. You are not factoring in the wage inflation, which would typically happen in April when you give an increase in salaries. So that's the increase, and along with the slight increase in additions of the count because of the increase in the overall store base. That's the only increase. Now, from here onwards, quarter on quarter, we should see largely a similar number for corporate costs. As was seen in the previous quarters as well. So once the Q1 base gets established, typically that remains largely the similar across the year. And coming on to your Pizza Hut question.
Yeah, I think so. Yum and us, we are completely aligned on what needs to be done on the brand and the need to improve the brand before going on the same pace of store expansions as earlier.
So these conversations are not a unilateral decision. So these store opening calls typically are a conversation which happens with Yum. We are also guided by a development agreement. How do we renegotiate that agreement, and how do we go about the next few quarters is a joint conversation which happens along with Yum. So Yum is fully cognizant of the current status of the brand performance, and they are fully on board.
Got it, sir. Thanks. That will be all.
Thank you. That was the last question. I would now like to hand the conference over to the management for the closing remarks.
Yeah, thank you everyone for attending. Like I said, it's been a steady quarter for us. Steady on KFC if I exclude the Navratra impact, and material improvement in Pizza Hut as well as Sri Lanka business. We continue to make our own destiny, continue to focus on improving consumer interest in our brands, and with change in the macros from a consumer spend perspective, I think we are well positioned for the future. Thank you very much. I look forward to speaking with all of you all next quarter.
On behalf of Sapphire Foods India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.